my God, Bitcoin is dumping, 𝗥𝗲𝗹 was right, this is the end, no more crypto, this was the bull run, all that. No. Chill down. I know everybody's panicking now, but I'm gonna give you in this video my analysis and tell you what Bitcoin is headed in my opinion. So in this video, you will see a Bitcoin price prediction with a reasoning on why I think we are almost only up from here. So let me jump right into it. So the basic idea here, what you have to see is that Bitcoin had to have a retracement, right? We had a very high open interest, and obviously we didn't come back to the 50%. If you follow my content, you know that we have to come back to the 50%, which is the discount zone always. By the way, guys, if everything I say is it's not familiar to you, subscribe to the channel, smash the like button, and also very important, link in the description, join our community where we teach you how to trade. So what I'm about to show you is that Bitcoin had to have a retracement, right? We needed to take liquidity. And that is exactly what happened now. Now, the way market makers work as well is that they want retail to think exactly the opposite what the market makers think. So now you could go on YouTube and you could go on Twitter and you could go on all the places and you could say that, oh, Bitcoin is coming down now, it started the retracement, now we're coming down to like 30, we mark this area as the demand zone and we say a support zone and we say 38,400 and this is the first level and the next level is down here with this, someone would mark it like this and then 33,000. Okay, so let me tell you why this is not proper. This could happen, but it would be way too obvious. And if it's way too obvious, that's not in the interest of the market makers. And if it's not in the interest of the market makers, it is not going to happen. So what I believe happened is that we cleared longs here. We had a massive liquidity built up here. Open interest was high, almost as high as in 2021. So we needed a flush. And this flush came in. Even people who I admire and, I work with and whatnot, they texted me and I told them they are new to this stuff. And I told them to capital preservation, very, very important. And they texted me in the morning that they lost X, a couple of $1,000s on this because they didn't have the stop loss. They thought they were safe, whatnot. Like, this was the liquidation and the taste of what is going to happen in the bull and the taste of what you really need to pay attention from going forward. It's very easy to make money, but all the profits you make in a lot of people who made profits in the past 2 weeks lost it all on this 1 week. So it's very, very, very important to do capital preservation and expect these dips, expect these dumps. So what I see happened is that everybody's waiting for lower prices now. And again, it can potentially happen. I'm not saying not, it can potentially happen. But here's my reasoning why I do not think it will happen. And that is because if you look at the BTC spot chart, so it's very important if you trade leverage, you still have to always look at the BTC spot chart because the spot chart is, so if you see a wick, for example, on the perpetuals, on the futures charts, that might just be a liquidation. That just might be, as I said, open interest and just liquidation. So if there is a liquidation, that's not a relevant level on the spot chart that determines where the price is going. So you always have to look at the spot chart, and the spot chart tells us two things. Number one, we have a very strong 1 hour and 4 hour order block down here, right? This level was the responsible that took the liquidity. Let me show you. That took the liquidity from here, right? So this liquidity here has been swept by this level here, right? So if we know that this level was responsible for this beginning of the inefficiency, was responsible for the sweep of the liquidity, we would have known that this here is an inducement, right? Inducement meaning we don't touch onto the level. I always say this in the community as well, and on my channel if you follow me, is that when you are in a bound, in a trampoline, you are jumping on a trampoline, you have to touch the trampoline to be able to jump higher, right? And if you don't touch the trampoline, that means that there is something wrong with that price action. That means that there is something that is not right. And that is exactly what happened here. We did not touch the trampoline, which is in this case the demand, but we bounced right back up. That was telling us that we need to come back down, and everybody who is long here, right? Everybody who's long here, we need to come back up. That was the wick, the buying up on the limit. And then we need to come back down, take these orders and come down to this level, take the touch onto the order block and move on. So what is interesting that on the 5-minute chart, you see this is a textbook example what you need to look out for when you're trading. You see a strong market structure shift here on the 3-minute, but you also see a strong market, not a strong, but a market structure shift up here. So let me mark it correctly. Market structure shift is basically a change of character in the market when the market is shifting trends. So if you're coming down, the price is coming down and it is starting to create higher highs after some time, you will create a market structure shift. So we're shifting trend. We had, you know, we had, let me mark it for you. So we had a high, we had a low, we had a high, lower high, we had a lower low, lower high, lower low, and now we have a higher high and higher low, higher high, higher low, higher high. So we basically shifted the trend, and this is exactly what happened here. So this is the spot chart. Why am I showing you the spot chart? Because I told you that wicks are relevant. The fact that we were able to close below here on the 5-minute tells me that this is a strong level. This is a strong level that is responsible for the break, the 5-minute break, right? So on the perpetual chart, what you see is that we have the exact same thing, except that this wick is lower than this. So I would say, okay, the problem is that this wick is lower, so then now we're building liquidity because this could be considered a double bottom, and therefore we might just come back and hunt this and take longs out. The reason why I don't think it will happen, it can happen, but the reason why I don't think it will happen is because on the spot chart we have everything set and we have a strong market structure shift. Therefore, if I know that on the spot chart we have a strong market structure shift, I know that we have a strong market structure shift here as well. Right? So if I know that this is a strong market structure shift, the only thing I have to look for is for this to come back to 50, for this to come back to the discount zone, and the discount zone lines up very, very nicely with this area here, with the beginning of the inefficiency. Now here is why this is interesting, because this is almost a yellow. Now when I say almost, the reason why I say almost is because we have internal liquidity here that could be swept. Now the two levels that I would look for in a short position, in a long position, is here around this 41,318, and the second level is down here after wicking liquidity, which is probably what I think will happen, around 40,962. So these are the two levels to look for. And then guys, the target, again, like the target, we can target the highs. I think we have enough pain in the system, obviously, until we break above this level, until we break above the main structural point, which is up here, 43,854. We cannot confirm that we are reversing and we are going to start moving up. And what we also can see, obviously, I have to be, as a trader, you have to look at the opportunities and you have to see a chart and you have to create scenarios in your head, what might happen if, and react to that. So you always play an if-then game. So if we pull back to these regions that I explained, go back to the video, I think we are going to go up and I'm going to take a long position. And if we are going to kind of chop here, we're not coming back to my level, but we kind of chop here and then come down. We'll see how liquidity builds up. But what we can see as well is that we start building some kind of liquidity for us to move on later. Maybe have some kind of news here that actually pushes us down, and then a strong MSS, and then a move on. So for now, I'm definitely looking for longs, and I believe that that's gonna play out decently. Thank you so much for watching. Subscribe to the channel, smash the like button, and guys, very, very important. If you want to trade leverage, and you don't want to do KYC, or you're in a region that is not, a platform is not available, go try out 𝗥𝗲𝗹. I'm serious. Go try out 𝗥𝗲𝗹. There's a link in the description. Try out 𝗥𝗲𝗹. It's absolutely incredible. I love the platform. I know the team. They are non-KYC. They are non-custodial, meaning that they don't keep your funds, that you're safe against hacks, and they are available almost anywhere in the world, including the United States. So check it out. Thank you so much for watching, and see you in the next one.